Hi, my name is Khan and welcome to the new chapter. In this chapter, we are going to learn about direct entry module and how it works and what kind of criteria you should follow before taking any trade. And also, you can take trade any time frame like using 1 minute, 5 minute, 15 minute, 1 hour, any time frame you can use. And also, you can use any currency pair, stock, forex, market, anywhere. So direct entry module is a very simple and easy to use, and simply you need to focus on a single time frame and you need to follow the structure and wait for it to take out the inducement, liquidity sweep, and then you can plan for the buy or sell based on the current structure. Let me show you through drawing first, then I will explain on chart for more better confirmation. In this case, we can say here market momentum is a bullish first, and after that market turn into bearish. So before this bullish and bearish momentum, you need to understand that how price is going on to the upside and downside on a reversal and continuation. So look at this one. Firstly, we need to understand here market momentum is a bullish and continue going higher high. So when market momentum is a bullish, as we know, market must be taken out the inducement before to push higher, and also we can take entry after sweep the previous higher low. In this case, we can see here market momentum is a bullish and one market taken out this inducement is here. So this is inducement, and in this case, we can see that if market taken out this one and this can be sweep and can be candle close, it doesn't matter. Main thing is here, while price bounce back to the upside, price must be close above the previous recent structure. Then we can plan for the buy to the upside in a bullish market. What happen if market push higher after taking out the inducement and sweep this one and then market went down? In that case, you don't need to buy here. Why? Because market sweep the liquidity and market can be turned into downside. So you don't need to take a reaction here for the buy to the upside. No. And again, what happened here? We can say here price close of it. So we can take entry here for the buy. And again, what happened if market pushing upside and market create structure like this one, because structure is a bullish and pushing higher high. This is our inducement here. But before this inducement, we can see here market take a one more pullback is here and sometime two pullback is here and then market push downside. So how we can take entry here? Simply you need to wait for it to take out this one. Once price broke this recent structure and close of it, so simply we can plan for the buy. You don't need to wait for it to break this high. Okay. Simply we can plan for the buy to the upside, taking out this one and close of it. So we can plan for the buy, put the stop loss just below it. So basically these are trend continuation pattern here, and we are looking for the buy to the upside after taking out the inducement. And what happened here, if market continue pushing higher high, when market reach on a top of the move, and after that what happened here? How we can identify that market on a top? Simply when price going on upside and then market taking out the previous high and just sweep the liquidity. In this case, market not close of it. Okay. So this one is the first scenario here. Here we can see two scenarios are possible, maybe closing and maybe sweep. So I will teach you both setup here. In this case, we can say here when price sweep the previous high, simply what are you looking here? We are looking for the sell. But how we can identify this sell setup here? If market pushing upside and taking out the previous high and then market went down and close below it. Once price close below it, so we can identify this is a sell setup here for the downside and looking for the reversal in a downside. So basically, this is a first thing is here, that how we can identify the reversal in a downside. And second thing is here, if price going upside and price close over it, for example, and this is our top, but we don't know this is our top. Okay. And after that, what happened here? Price push downside and break this low. But basically this is our inducement because market momentum is a bullish. So if this one is inducement, so how we can identify that market looking for the reversal or continuation? In a first attempt, if market pushing upside but not able to break the previous high, and then what happened? Market break this low. It means the direction of the trend has been changed, bullish to bearish. So what happened here? This is our pullback like this one and market went down. So this high act like our inducement now. Okay. So simply if market push upside and push downside, so this is our area when we can expect that market looking for the reversal in a downside. And this is applicable while price close of it. Okay. But when market sweep the high, so simply we can plan for the sell after break the recent low is here, as I explained recently, this one. Okay. Previous higher sweep here, push downside, close below it. So we can confirm that market looking for the reversal in a downside. And this reversal can be for short term and for the long term. It depends on situation. Again, what happened here? Look at this one. This is our inducement, as I mentioned here recently. This is our inducement because in a first attempt, market not able to go higher to break this high, market push downside. So this is inducement. After taking out the inducement, this is our counter trend is here. Break this one and maybe closing and maybe sweep. In a both scenario, this is a valid here. Okay. Market push downside and break the first recent pullback is here. We can directly buy here without any pullback. Okay, but price must be close below it. If candle close below it, so we can take risk here for the sell. Otherwise, no. Okay, because sometime what happen, market sweep this one and market going higher high and market trend action has been changed. So we can plan for the buy here because the inducement taken out here. So you need to prepare for the both direction before the buy and sell. Okay, so this is our area that how we can identify for the buy and sell, and same thing applicable in a buy and same thing applicable in a sell. And this is our one more setup is here. Market momentum is a bearish and break the inducement, and after break the inducement, market just broke a downside directly, and this is a candle closing here. We can sell here directly without any inducement confirmation. Why? Because market already taken out the inducement. Okay, so these type of things you will see on chart in a different story. You have to wait for it confirmation before the buy or sell. Let me show you on chart for more better diagram and better understanding of the market. This is a Euro USD chart in a 5-minute time frame, and the market momentum is a bullish, and this is a just example that how you can take entry directly using a lower time frame, and you can use any time frame like 5 minute, 1 minute, 15 minute, any time frame you can use it. I will teach you about the 5-minute time frame first, and later I will show you in a different time frame also that how it work. A direct entry module is here. Look at this one. If market momentum is a bullish, something like this one, so how we can take entry here? If market momentum is a bullish, as we know that market must be taken out the inducement, market close of it, so we can plan for the buy to the upside. So this one is a very simple thing is here. This one is an inducement taken out, and after taking out the inducement, probably we are looking for the buy is here. This is our direct entry model, and in this case, the risk reward will be sometime is a good and sometime is a average and sometime below average. So in this case, we can see here following the structure, market momentum is a bullish, break the previous structure, taken out the inducement, market close above it, while price close of it. So probably we are looking for the buys here. Put the stop loss just below the structure and target based on the structure, and also you can set based on the Fibonacci tool. Fibonacci tool to use the top to bottom is here, like top to bottom is here. 2.618 is our almost target, which is 1.5 R, right? So this RR maybe sometime is a good, sometime is not good. Okay, so at least you should set a target at least 2R is here. Okay, so this is our target when you can set here. For the Fibonacci tool setting is here. You can set in your trading view. This setting will help you to mark the take profit. 1.618 and 2.618 is your actual target, and also you can set a 3.618. It means you can set 3 targets here, which is almost at this point right here. Okay, so basically these level help you to identifying the target level is here. Okay, so this is our first entry here, and look at this one. The next setup, what happened here? This is our previous sweep here. Okay, as we know, when market sweep the previous structure and break the same low is here, so we can plan for the sell. Of course, we can sell here, right? And put the stop loss just over it, because this is our reversal entry here, and this is our stop loss here. Okay, this one is a valid stop loss here. Another thing happened here. After this one stop loss, market just broke this high in a first attempt. When market break this one in a first attempt, close above it, so we can plan for the buy because the direction has been changed again, bearish to bullish. While price sweep the previous high, as I told you in a starting, that if market sweep the previous high, break this one, so we are looking for the sell. Same thing happen here. Previous high the sweep here and close below it, so we can plan for the sell. Okay, so this is our loss here. Again, market change here, break this one, close of it, so we can plan here for the sell. Look at this one, and this is the previous sweep here. When market sweep the previous structure, take entry here for the sell and put the stop loss just above it. So basically this is our reversal entry here. The probability of the reversal entry is a 50-50%, but in a continuation the probability of the winning is a higher compared to the reversal because you are following the trend. Okay, let's see. Market close of it, we can take one more entry is here because price close of it, put the stop loss just below it, and where is target? Target you need to set based on the Fibonacci. Catch from top to bottom is here, like this one. 2.618, 3.618, basically these are few target here. Okay, and after that again price close of it, and after that what happened here? Price going higher high. Look at this one, price pushing upside, take a small pullback is here, One more time is here. What happened here? Look at this one. Small pullback, again going higher high. And finally, market taken out the investment. Probably we are looking for the buy. Simply because of the investment taken out, but market not able to close of it. If close of it, we can plan for the buy. But at the same time, what happened here? Price take a small pullback and this low is a sweep here. So which is an indication for the reversal to the upside. Same like this one. Like if market momentum is a bearish and sweep the previous low and close of it, so we are interested here for the buy. It doesn't matter that which side is the market going on, like bullish and bearish. Basically, this sweep is here in a bearish trend. So this is our sweep, close of it. So we can plan for the buy at this point right here and put the stop loss just below it. And where is target? Target you need to set based on Fibonacci tool 1.618 and 2.618, and final target is a 3.618. Okay, at least you need to set a target almost 2 hour. Okay, 2 hour, 3 hour and 4 hour, it depends on situation, but at least the 2 hour trade. Okay, so this is our here you will get almost 3 hour setup here. After that, what happened here? Again, market see the liquidity and market went up and close of it. So if you are thinking that why this one is not a valid setup, of course this one is a valid setup here, but where is entry? Look at the risk reward here. If you are taking entry here and putting the stop loss just below it, so this one is not a good idea here for the sell. So based on the setup, this one is the entry, but the risk reward is not calculated here. So we don't need to take a risk here like randomly anywhere. We need to calculate the risk and reward. Okay, so then you can take entry here for the buy and sell. So this is exactly how you can take entry directly in a bullish market, and let me show you in a bearish market that how things actually work in. And also you can use a different time frame like 2 minutes, 3 minutes, 1 minute and 5 minutes, 15 minutes, any time frame. This is our one more example here. We can see here that market momentum is a bullish and now turn into bearish here, and again market take a sideways and after that again turn into bullish. So this is applicable everywhere in any situation here. So we need to start from top of the structure because structure start from here. This is our previous swing high and previous swing low. In a first attempt, market not create here any kind of like investment, and after taking out this one, market not able to break the previous high, and this is our internal structure as you know, right? So how we can take entry here? Look at the structure here. This is our first pullback is happen here, and after that again going higher high, take a one more pullback is here. But in this case, we can see here clearly this previous low is a sweep here. So if market sweep the previous low, simply we are looking for the buy. But which point we can buy? Market must be break the previous high. Market not able to break the previous high. Market went down. Again, we need to take this one. This one is a sweep here. Market must be break the previous high. Then we can take entry. Market not able to break this one. Again, what happened here? Market again sweep the previous high. And finally, market break this one and close of it. So we can take a risk here for the buy as we know. Okay, I put the stop loss just below it. And where is target? Target based on the Fibonacci tool. We can set based on the Fibonacci tool. Technically, this is our previous swing higher low. 2.618 and 3.618 is here. This is almost 2 RR. Okay. So this is our entry. This you can take entry here. And after that, what happened here? After that, we can see here clearly that price start pushing upside like this one. One more pullback is here. Again going higher high. But in this case, we can see market sweep the liquidity but not able to break this one. So if this one is a broken, so we can confirm that market looking for the reversal in a downside. This is a previous sweep here, and this is applicable in all time frame, right? So this one is a sweep here, and after sweep this one, if market close below it, so we can take entry. Even market again sweep this one. So if this one is a sweep here, we need to take entry here for the buy. Which point we can buy here? This one, because this one the recent swing high is here. So we can take entry here. And where is stop loss? Just below it. Okay. And where is the target? Target based on a Fibonacci tool, probably 2R and 3R. But in this case also you get a stop loss is here. Right. Again, what happened here exactly? We can see here clearly that how price is reacting here. Look at the structure here. This one, small pullback, going higher high, push downside. In this case, we can see here, one more time is here. This is our counter trend as well as here. The previous high is the sweep here. So if market sweep the previous high, also we can take entry here for the sell and price close below it. If price close below it, so simply we can take entry here for the sell. And where is the stop loss? Just above the high. And where is target? Target based on the Fibonacci tool, previous swing higher low, 2.618 and 1.618. This one is our target, right? So we can take entry here. Again, the continue market falling in a downside. And finally, market again taken out the inducement is here. After taking out the inducement, probably market must be taken out the previous high. Which point is high? This one. Market not able to break this high, but market create internal structure here like this one. Again going higher high, and market push downside and finally break this one. So if break this one, so we can take entry here for the sell side. Look at this one right here. Okay. So we can take entry here after close below it, price close below it at this point right here. And this is our entry and this is our stop loss and target based on the Fibonacci tool. Bottom to top is here. 1.618 is our first target here, and you will get almost 2 hours here. Okay, you need to set a 2-hour target which can be achieved on 1.618 and 2.618 and 3.618. Okay, so in this case you will get almost 1.78, so you can scroll down until 2 hours, right? So this is a way to taken out the entry after sweep the previous high. And why we losing these two trade here? Okay, remember one thing is here. Why we losing these two trade here? Because the market direction is a bear. So if market momentum is a bear and looking for the like a reversal trade, then very highly chances I already mentioned the 50% of the probability. If market momentum is a bullish and you are looking for the buyer side, okay, the probability of the winning is higher compared to the seller. Same thing applicable in a bearish market. If market momentum is a bearish and you are looking for the sell, then your probability is a higher compared to the buyers. Same thing happening here. Market direction has been changed, bullish to bearish, and everything was bearish here. So if anything happen here in a bullish direction, so winning probability is a 50%. And same thing, and when market create a bearish setup, the all setup is going downside as per your plan, as you. And this is our 2-minute time frame, and this is our live market is here, and we can see here clearly that how price is reacting here. Market momentum was bullish and turned into bearish. So how you can take entry, direct entry using 2-minute time frame, even 1-minute time frame, you can use any time frame is here. We can see here clearly before this move is here, market momentum bearish and turned into bullish. So look at this one. This is our previous swing high, and this was previous swing low. And again, what we are looking here? Suddenly we are looking for the sell after taking out the inducement is here, right? So after taking out this one, market just sweep the liquidity. Market momentum is a very simply what we are looking here. We are looking for the sell after break the recent structure here. This is our broken here, and we can plan for the sell is here. And where is stop loss? Just above the high. And where is target? Target based on the Fibonacci tool. This is our top to bottom is here, and we can set 2.61 1.618 is our target right here. But unfortunately, this stop loss is a hit here. And again, what happened? Market just going upside, and this is a one more pullback is here. Market with the liquidity, and finally market again broke a downside right here. Okay, so when market broke the structure here, close below it, we can again plan for the sell, because overall market direction is a bearish, main trend is a bearish. So this is our entry here, and where is our target? Target based on the Fibonacci tool, we can set 1.618 almost here, right? So this is our one more target is here because of the previous high is a sweep here. As I told you in starting that if market momentum is a bullish and sweep the previous high and break this one, so we can plan for the sell. Okay, so this is a basically market direction is a bearish. So if everything is a bearish, means the trend is a bearish and market create a sell setup here, the probability of the winning is a higher compared to the buyers. Again, what happened here? Market pushing downside, market taken out this inducement because this is an inducement. Market momentum is pushing something like this one, again going high, and finally taking out the inducement. After taking out the inducement, what we are looking here? We are looking for the sell, but which one we can sell here? We can sell after broke this low, because this is main low is here, and this is inducement right here. After taking out the inducement, if anything happen like this one, look at this one, okay, and then market turn into bearish. More thing is here. If market momentum is pushing downside and taken out the inducement, if anything happen this one, this is called inducement internally, right? For example, if market momentum is a bearish, and after that what happen here? After taking out the inducement, if market creating anything between the previous swing high or low, that's called internal structure. So basically, if you are looking for the buy or sell anything, simply you can take trade for the buy or sell for the short term based on the internal structure. Same thing happen here. This is our inducement here, and after taking out the inducement, probably what are you looking here? Simply we are looking for the sell, but which point we can sell here? We can sell after broke the low. So this is our previous low is here. If market broken, so we can sell here, but the risk reward is not a justify here. Okay, so how we can take entry? You can take entry based on the internal structure. if market creating here any kind of like bullish structure, so we can buy here. Look at this one right here. This is our previous swing low is here because of the internal structure is a sweep here. So we can take entry here and put the stop loss just below it. Where is target? At least this one, right? And this is our previous swing high and low. 1.618 is our target, and the next target is here. The previous swing high is a sweep. Break this one, and we can again plan for the sell right here. Put the stop loss just off the high, and where is target? Target based on the Fibonacci 2 1.618. Okay, so this is exactly how you can take entry in a lower time frame as well as, and same thing applicable after this one. Look at the structure. Inducement taken out in a first time market not break the previous low, just take a pullback and again going higher high. It means market looking for continuation. And finally, what happened? Create one more pullback, break the high. We can take one more entry. Setup is here, and this process will be continue to upside, like the market is going upside and upside. Right now market not taking out any kind of like inducement. This point market taking out the inducement if price close of it, so we can take one more entry. Setup is for the buy to the upside. It means we can take entry in every time frame, like 1 minute, 2 minute, 5 minute, and even any time frame. The risk reward will be depend on time frame, because the higher time frame the risk reward will be decreased and the risk is much higher. But if you manage the risk, the calculate the number of lot size, so you can trade any time frame. There is no need to worry about it. So I hope you learn. In this chapter that how you can take entry using a direct entry module, and this is a very simple and easy to trade. You don't need to focus on any other things. Simple, follow the structure and follow your trading plan, and you can take entry. If you not understand anything in this chapter, simply you can watch this chapter multiple times. I'm very sure this chapter will help you a lot. So thank you so much watching the entire chapter, and I will see you in the next chapter. Happy trading.